Hello, my name's Craig Earl, I'm Senior Market Analyst at Oanda, and today we're going to talk about the pound versus the US dollar. Naturally, one of the major stories right now in financial markets is, of course, this Brexit saga, the never-ending story, the story that's gone well beyond or already what it was meant to. The UK was, of course, meant to leave on the 29th of March 2019. It's now early April, and we are very much still a member of the European Union. We have no idea what the actual Brexit deal is going to look like and when it is that we are now going to leave. As per the extension that was agreed with the EU previously, we have until the 12th of April to pass something in Parliament which the EU can then sign off. We then have until the 22nd of May in which to pass all the various legislation in order to leave. If we don't pass something by the 12th of April, we must request a longer extension or, of course, leave with no deal. And with only 9 days until that date, it's not quite clear exactly what is going to be chosen. What has been clear for a number of months now, and what Theresa May reiterated yesterday, was that they do not want to leave without a deal. There is strong opposition to that in Parliament. Parliament has voiced that opinion on numerous occasions throughout the last few months, but in two recent votes, they've made that position perfectly clear. And that's one of the reasons why the pound has remained resilient throughout this period. The greatest risk from a currency perspective and from an economic perspective is the risk of no deal. So as long as MPs continue to staunchly oppose that, then I think we could potentially see the pound continue to be well supported. That said, the closer we get to Brexit Day without a deal, we may start to see nerves creep in, and we've already seen some signs of that over the last couple of weeks. We've seen the pound edge back towards the bottom of that range against the US dollar, back towards the kind of 130 levels. We have been range bound for around a month now, failing to break through 133 on that optimism that we're moving towards a deal, but equally below 130 because no deal still looks highly improbable. But again, a lot can change over the next week. A week is a long time in Brexit. Right now, it looks as though we're going to see the main two parties, or at least the leaders of the main two parties, engage in talks over potentially finding a solution, finding something that resolves the impasse over the next 24 hours or so. I think there's a lot of cynicism, though, in the markets right now because the positions they've taken previously, because the amount of politics we've seen played. I think there's a lot of pessimism around whether there's actually desire on both sides to find a deal, or whether, again, this is purely for the media, and also whether, I guess, Theresa May is just doing this in order to try and scare some of the more hardline Brexiteers within her own party into supporting her deal before next week. I guess we're going to learn a lot over the next week or so, but until we start to see some progress one way or another, we could continue to see the pound remain range-bound, especially if the last month is anything to go by. Of course, when it comes to this, there's always two sides to this story, and the other side is the US dollar. Now, reports or stories that are really moving the US dollar on its own over the last week or so have been relatively quiet. That's not through a lack of economic data, of course, but I think the focus really has been on Europe, whether that's the economic data, the PMIs that we've seen, which have been disappointing earlier in the week, or the Brexit story, which we are seeing now. It doesn't really matter. A lot of the stories which are moving the US dollar are actually coming from movements in other currencies rather than the greenback itself. Of course, the one area where the US is very much at the centre of it is these trade talks with China, which resume today. So potentially we could see some movement on the back of that if we do see some form of progress there. It's also worth keeping a close eye on the US non-farm payrolls on Friday. Again, a major economic report, arguably the biggest economic report we get each month, and coming on the back of a very poor report a month ago. I think there's going to be a lot of attention now paid to this one.